All right, welcome everyone. Welcome to today's live stream. We're going to take a look at the NFP event, the non-farm payroll, do some live trading and live analysis. And with me is no other than Dirk Hartig, who's
Hey,
a
how's
market
everybody
flipper.
doing?
Welcome, man. I think you've been in the
Thanks.
market for how long? 20, 25 years?
Yeah, it's my 25th year, January 2026 years in 2024. Yeah.
Awesome. And guys, by the way, you gotta check it out. He's on YouTube. I linked the channel in the comments, so make sure you check him out and subscribe. He recently uploaded a video showing a trading strategy that he has been using with his 25 years experience, which definitely recommend you check out. Right. So, what's your expectation here for the NFP event?
I gotta see. I mean, in general, what we've been seeing over the last over the last year is that we had a job market that continuously was growing slower. I think last month we had like 150,000 newly created jobs. Expectation today is 180,000, if I'm not mistaken. Average has been over the last year around 256,000. So that is at first glance, you might say like, okay, this is maybe not a good thing for the economy. Are we heading for a recession? Because less and less newly generated jobs should not be something that is good. However, we are still in the special constellation that we've been now in for over a year, ever since inflation hit its peak in the USA at 9+%, that the Federal Reserve really wants the job market to slow down. Why does it want the job market to slow down? Because people have less money in their pockets, they can spend less, which also should add to inflation coming down further to this target of 2% that the Federal Reserve had. Now, for today, I'm not so sure. I think we actually might see things getting a little bit weaker, the numbers coming in a little bit weaker. Let me just open here this quickly, because earlier this week we had the JOLTS job opening already, which were expected with 9.3 million, but came in also weaker at 8.73 million. And I kind of noticed in the past when that measurement of the job market comes in lower, which always is like broadcasted 2 or 3 days ahead of a non-farm payrolls. The non-farm payrolls tend to be a little bit on the weak side as well. However, what that means for the market, we have to see. Of course, under normal circumstances, I would say if a number comes in weaker than expected, we should see also declining stock markets or in general declining risk on assets. So, for example, cryptocurrencies also, which is a whole different case at the moment, as we've seen in the past 2 weeks with Bitcoin and Ethereum now also catching up a lot, but maybe more on that later. But we could see actually the opposite this time, because weaker than expected job markets like kind of goes into the direction the Fed still wants to see, because a weaker job markets in this environment means there's a less high chance that we are going to see further interest rate increases in the USA. We have reached this plateau already. I think we are going to keep it until next year, maybe April, May, and when the interest rates are going down again. But let's focus on this one. So I think we might see, if the numbers come in weaker, actually quite a bullish reaction of a market. And I would love, of course, to see something like the S&P 500 finally, going over this massive resistance we have at 4,600 points to 4,620 points, close over it. And then the way to the top is to a nice year-end rally is wide open.
Yeah, I mean, we've seen the S&P 500. It's been consolidating here for I guess about a week or something like that at resistance, and it does look very, very interesting. Maybe do you have some thoughts on, you want to show maybe a chart or your thoughts on the S&P 500, maybe Bitcoin, because what I'm seeing here on the S&P 500 and Bitcoin is definitely. I mean, it's just amazing to see Bitcoin doing its thing here. It's
I mean, Bitcoin is doing what Bitcoin likes to do. Last year we saw to the downside. I still remember a while ago we had a live stream over a year ago in November when we were at those lows where around 16,500, 15,000 or whatever it was back then. People were asking us, oh, we're going to 10 now or to 8,000. And I very well remember that you were quite outspoken about might be the case, but this is also probably a good buying opportunity long term, which
I mean,
turned out to be.
I can, I just want to share my screen here, kind of show what. I mean, I think it's important to remember that we were talking last time around. I think when the chart looked something like this, maybe even, something like that, and. You look at this, and one would definitely say that, it could be that we have more room to the downside. But I mean, I've been accumulating Bitcoin as soon as it broke below 20K, which is what was around this area here. I believe this was FTX, maybe.
Yeah, that was
maybe
FTX. I think was like November, no? Wasn't it last year?
Yeah,
it was November because I still remember I was in Indonesia.
Oh, okay.
So
is this FTX?
I think that must have been the slump. Yeah.
And this is Luna.
Yeah. Oh, yeah. Right. Terra Luna.
Yeah. So
Steady
I remember.
Yeah.
So right after Luna, I remember we broke below 20K and I started buying, and the reason for that was rather simple. It's because this was has been my accumulation phase, area of accumulation, for a very long time. I've been planning to buy down here, and now I didn't expect this, but what we're seeing now is we're out of this the whole reload zone, the whole area of accumulation, and we are well above that. So let's just say from the 20K, I could go all the way down here, but nobody loaded up heavily down here. Maybe I think it's probably averaged down. But if you could say that people that were accumulating in this area probably had an average entry of around 20, they are now up over 100%. And think about that. Bitcoin is up 100% from the time when it was all, the doomers were out saying how Bitcoin were going to go to 12K and it's all catastrophic. While we're looking at this and we see a very, very clear opportunity to start buying at a very strong support level, right? And now you look at Bitcoin now, and it's just amazing to think that we are no less than 57% from all-time highs. 57%. That's in terms of Bitcoin price action, that's nothing at this point. So I think the NFP event here today will tell us a lot about the overall market and where Bitcoin might be going next. And looking at the S&P 500, this bounce right here is just phenomenal. It's just an amazing price action right here, and this just screams very, very bullish. However, we're at high time frame resistance right here, and funnily enough, price just seems to come up to resistance right when we have major news events.
Yeah, it's always like this, no? I mean, to break over a resistance or under support, as a matter of fact, when the same here, you normally need some story narrating it, no, which could be an economic indicator that's better or worse than expected, or something pointing into the direction that the market wants it at. And that could be the case here, because I think if we see weaker numbers today than expected, or at least numbers around those 180, we might not have an immediate market reaction, actually. It might be that it's like a no volatility event, but I'm sure it's going to be the narratives for institutional traders, especially, saying okay, I'm quite sure now on what is that, I think December 13th, we're not going to see another interest rate hike. That's all for now. And it's time to buy into the markets. It's it sounds a little bit arrogant now, but everything I've been saying since September last year has become true. I said, okay, inflation is ticking down for the first time from very high levels, this is the time to buy now. Of course, I didn't catch the bottom, like you also said just now perfectly. Started buying already at 3,800 in the S&P 500, for example. But still, it's what pays off now. The question, of course, is when to exit now. I don't think the exit is coming now. I'm a little bit surprised. I'm actually quite surprised about those moves we currently saw as well, because I actually expected here November, December of 2023 to become still a little bit weaker, because I thought the US debt is going to play a bigger role in the public eye. Why? Because we have what is that, like 60%, I think, of US debt that needs to be refinanced over the course of the next 3 years. And that is now averagely financed at 2.97% and is very likely to be refinanced when at over 5%. But the market is ignoring that for now. By the way, I don't believe this is going to crash the markets, but I think that could, become the public attention a little bit of market participants in the upcoming months. And maybe this is going to be also the reason then that the Fed is going to lower interest rates again, probably starting in May, which coincidentally, late April, we have a Bitcoin halving as well, which could be monumental, really.
Yeah, definitely. That could really change a lot of stuff. I'm interested to see if you have any ideas on where you think Bitcoin might be going here. Do you have any thoughts in mind? Anything you want to be?
Let me first of all, just to finish off that narrative, is what I was talking about here is these interest rates plateaus we usually see. So those go back, it's very hard to see on this chart, until 1990, I think. And what we usually see is once we reach an interest rate plateau, it's just a matter of time until the Fed starts lowering interest rates again. We've reached this plateau in September, which was, I think, the first month where we saw unchanged interest rates. And usually, on average, this interest rate plateau stays for around 9 months. And after those 9 months, on average, then the Fed starts lowering interest rates again. That's why I said September was the last time, or the first time it stayed stable. So 9 months forward, we would be somewhere in May of 2024. Now, for Bitcoin, this is, of course, good, because it's perceived as a risk-on asset. So money is flowing into it when it's flowing into stocks as well. We've seen that over and over again in bull markets and bear markets, the correlation between the Nasdaq, the S&P 500, and Bitcoin. What is interesting for me is, first of all, the new bull market starts slowly forming already 18 months prior to the halving. That's also why I started last year already around October, November, accumulating Bitcoin again. I started, I think, when we dropped actually under 30,000 back then. So must have been a little bit earlier. I couldn't hold my hand still anymore. And what we usually see is this accumulation phase, this 18 months, which can be quite a little bit volatile, like we saw before 2020, which with a large wick down to 3,000 when COVID broke out. We kind of have reached the upper band now here, if I zoom in a little bit here right now. However, if we look, for example, if we try to approach this from a more mathematical standpoint, and I don't want to bore you with math now, don't worry, we can kind of draw a logarithmic regression on Bitcoin. What is a logarithmic regression? It's good to spot trends in things that are growing very fast at first, and over time the growth slows down a little bit as it matures. Like, for example, if you have a baby, you'll also notice at first they grow super, super fast, and over the years they stop growing. Until they're grown out eventually. And what we see here is that normally around the time of the halving, so the first one here is the 2016 one, the 2021, next one 2024, Bitcoin likes to be around this average band here, which is symbolized by this purple line here, which should be at around the time of a halving somewhere around 50,000, maybe 55,000 US dollars. But things really just kick off then. And if you compare now the move up we made just currently, which is this little thing here, it's like, in the grand scheme of things, it's really not much that we've seen in movement up. Like, we could very well also shoot over the band first, go to 60 or 65,000, then drop down again to 30,000, or maybe drop down immediately to 30,000, and then slowly recover to 40 or 50,000 until end of May. So what is going to happen after this? My minimum target actually for Bitcoin would be 100,000 US dollars.
Yeah,
And
that's my target as well.
this would be if we repeat what we've seen after the halving in 2020. So that's the green fractals you see here. The yellow fractals is more like what happens if we repeat 2016. Then we would reach 300,000 plus. I don't know. Of course, I would prefer the 300,000. Might be possible even that we see more, because last time, I mean, let's be honest, Bitcoin underperformed after the last halving, mainly to FTX, to Terra Luna, to Elon Musk in the beginning as well. So if we get an overperformance, we might shoot past 300,000. When is this going to happen? Normally between 12 and 18 months after the halving. So we're probably going to see the tops again, this price at 100 or 300,000, maybe just 80,000, maybe 500,000. We don't know yet. But it's going to be very likely 12 to 18 months after the 2024 halving. So we're talking about beginning of May 2025 until October 2025.
Yeah,
of course, we don't see like something super bad happening again. Like, I don't know what this weird lung disease there is that's coming from China again.
Yeah, I mean, yeah, there's definitely a lot of stuff that can happen. But it is what it is. I mean, we might get another black swan like COVID.
But one thing you cannot do as a trader, you cannot bet on black swans. That never works out.
Exactly. You can only try to prepare yourself by not being too overexposed. To markets. So what I'm looking at here is basically, the reload zone down here where I was accumulating. And also one of the reasons why I started buying Bitcoin down here was, so first I look at price action, I look at an area. So basically it's just, for me, super obvious, the high of 2017 acting as support right around the general area where I wanted. And also something also very important is the MVRVC score for Bitcoin, where we broke into the buy zone, which is the green zone right here, right at so the June the 12th 2022, which is right here. So on this stump right here is where we actually entered the buy zone on the MVRVC score. Now my target would be, so I have a psychological target of 100K. And usually, like, my plan has all along been to look at the like the extension reload zone here up here for potential target, and that lies above 100K. But I do think 100K makes sense. And also, if you look at the MVRC score, we've exited the buy zone, and basically it's very simple. My strategy is simple. I buy the green zone, I sell the green zone. This has worked 100% of the time. Every bull market has started inside the green zone. This was the COVID crash, and every bull market has ended in the red zone. And almost every bull market for Bitcoin has began at some sort of level that agrees with the reload zone. Now, I'm not sure where I should, start with the fib. If you look at you have to kind of see like where was the actual beginning of the 2017 bull market, and I don't really think this would be super accurate. No, so I think this is where the reload zone is not like super active, and this whole price action here is just creates a lot of problem from a high time frame perspective, I believe, when it comes to TA. But it's usually what I look for is a pretty like a big drawdown. So here you have like somewhere between 75% and 90%. That looks like a usual pattern for when the bull market is ending for Bitcoin. And this time around we had 76. So I think it's to me it's very, very likely, if not like I would say I'm very confident in saying that this, the bull market for Bitcoin is on. I can't really see that this would be anything else unless we have, like you said, have another black swan, like maybe COVID 2.0, there's some maybe like the war in the Middle East and Ukraine somehow explodes and becomes a bigger issue. At that point, of course, we can't have an overall risk on environment. So that might be, but again, we can't bet on black swans. But what I'm seeing here is we're following, we're following this pattern of just having this overall bullish. Oh, that's weird. I shouldn't be using the log scale here. But you know what I'm saying. Like we're following that overall uptrend right here, and it seems like
that's the thing. It's like always, like so simple almost that it's scary. That I keep always asking myself, now, is that true? Is there something I do not see? But then again, when I talk about this with people within my circle of friends that are not in finance, which are most of them, they for them, they don't even know, hey, okay, Bitcoin, I've heard about this speculative asset, it's like a scam or whatever. Maybe they don't hear about things like this until they read it somewhere in their newspaper. In the gossip newspaper, Bitcoin has risen again to 43. I bet when it crashes down to 35, should it do that again, then we're going to see something in the news like Bitcoin crashes again and destroys billions of US dollars in value. And we have to be careful, of course, because we have the glasses on here, and not that we only want to see it in one direction. I think we are capable of questioning ourselves as well. But like you said, for me, it's obvious. What you just explained with the, what is it called, RSVP score, the one you showed just now. It's simple. It's obvious.
Score.
It's exactly what you are looking for as a trader. You are looking for patterns. I did the same with the inflation when it came down. This is a pattern. It's a pattern that worked throughout the ages 100% of the time, and it works 100% of the time that if you buy Bitcoin at the halving or 6 or 18 months before the halving and then sell it 12 to 18 months after the halving, that you made a lot of money. It's going to be the same. And I'm already looking forward again when we have people crying that are left behind. No, I'm not looking forward to this with something mean to say, but it's the same one. It's going to be my third bull market then in Bitcoin, and it was the last two bull markets the same. People are at the like you just said at the bottom, they don't want to buy, and now we're at 40,000. They don't want to buy because they want to wait until the market goes back to 35. Should it go back to 35, they want to wait until it goes back to 30, and then they miss out because the market goes to 70.
Yeah. I mean, I do hope that we see a major retrace here. I would actually think it's
would be healthy.
But it's not going to happen. I don't think it's going to happen. I mean, look at all prior bull markets. When it's on, it just keeps on moving. Everyone's left behind. The only one who's really making the big money are those who had conviction of buying. However, I wish I bought more. I wish I really, I really wish I was really, stick with my intuition here of just going all in the reload zone. But like that's, you have to it's unresponsible. Like you have to think. You have a family. You have responsibilities. You can't just go all in on something like this. But and you have different investments. Like you can't just be in one asset, because who knows? Like who knows? It might just have been that 2023 was the time when the Bitcoin cycle is changing, shifting, and we were going down to 10K and blah blah, something like that.
Or something like I remember this video you posted on Twitter about general artificial intelligence, that it has been achieved already, that it's able to crack codes that are up to now deemed uncrackable. If something like this comes on the market, of course, crypto is dead then. But before crypto is dead, we are going to see classical finance dead as well. Because they
exactly. So, I do think that paper was debunked, but I mean, you think about it. You think about quantum computers. You think about AGI, and you think about like why not? Why would it not be able to sometime in the future be able to crack? But then like crypto blockchain is built on encryption, and like I'm not an expert at encryption, but hopefully if it uses a technique or whatever where there's like a real loss of information in the encryption phase, where no matter how intelligent you are, if you don't have the key, it's just not going to be able to encrypt. I mean, I think that time is way. I think AGI is pretty close, but the ability to crack like standard industry standard decryption is far off. So I think for now Bitcoin is safe, but I have a feeling that 2024 is going to be a massive year for Bitcoin and crypto, and the way technology is moving,
it's incredible.
Yeah.
I mean, like just looking at something like ChatGPT, it's like the amount of work it saves me every day. It's just incredible. Just for researching new ideas for videos, for blog articles, for Twitter, and so on and so forth. Where before you had to meticulously crawl through the web and search for everything by hand, and now you have a AI assistant that can take this labor off your shoulders, so you can concentrate more on the creative part, which is really awesome.
Yeah.
Not to mention things for trading, of course. I saw your video there on using ChatGPT as a trading assistant, which I like very much.
Yeah, right. So we got NFP coming up in just a couple of minutes. I am going to. So I do have an open position. Let's see how it go. What it does here. It's on Euro CHF. It's not looking great. I'm hoping I'll get a push here to the downside. Euro CHF is a tricky one when it comes to NFP. It's
I just opened an option position in that one the other day also.
On Euro CHF.
Yeah.
Is it a short or long?
I sold a put, so I'm betting on long.
Okay, well, whatever.
You're the opposite direction. Oh yeah, I see that right now. But mine is like as long as it doesn't go under 85, 75, I'm good, because this is where my strike is.
Yeah. So what I'm gonna do is I'm gonna place orders on Bitcoin. I can't do that on. I can't do that in TradingView, so I'll just do it on my other screen here, and I'll. No, I don't know. I wanted to put an order in on Bitcoin, but I think we're gonna get rejected here. I think I think this is the resistance where we're gonna get our first major rejection, I believe. So if I would trade this, it would probably look something like, so looking at the 4 hour, probably look something like this, perhaps. And then going down to the 1 hour, yeah, I would probably like, yeah, it's a bit tricky because there's a very clear level here. So I don't know, maybe if it kind of goes maybe something like this, I would want to short it, just because I have a bias of to the downside because of resistance, but also you look at the local trend, it's just, yeah, it's
5 seconds. All right,
yeah, I'm not going to take a trade on Bitcoin, but I'm gonna
S&P 500 goes massive down. Not massive, sorry. It's like 199, so it's better than expected.
Right. Okay.
So, but see, yeah, it's like the reaction is immediately to the downside, because people are immediately afraid again that we are going to see an interest rate hike. So I assume we are seeing the same at Bitcoin probably right now. Yeah. 43.5. Not much of a reaction, actually.
No, I think this. But I guess that was what I was looking for, breaking below that level. The initial reaction is usually
the wrong one.
My experience, yeah, exactly. I can't find. I'm on FX, daily FX. I can't find. Can't find the figures.
And I got them directly from TradingView just now.
Right. Okay.
Let's see. Dollar Swiss is a bit up, of course.
Okay, it says 199.
0.88 in US dollar Swiss. your favorite trading pair?
Wow. Well, I got a wide stop loss on that one, so I'm not too worried. I'm just gonna. So that's the thing, Usually I see very heavy volatility around these events, but usually the first reaction is I'm not really that.
It's not a big reaction actually. No? If you look at the daily chart now, it's not that big.
No.
It just always looks a bit daunting on the 5-minute charts when you suddenly have this. Yeah, but it's better. I expected also, let's be honest here, I expected it to come in worse than expected. So deviates this time from the jolt job openings. Interesting. Also, the employment rate down by 0.2% to 3.7%. Yeah.
So if I would take a trade on Bitcoin because of this, I would look at this. Yeah, that's probably what I would look at. EuroCHF. What's happening with EuroCHF? Do you have anything you're watching? Can I switch over to your chart?
At my side, actually, everything is good.
All right. you're not in. You're not. So you're
no.
in
It doesn't really matter for me because the positions I have currently are like long term, so they're expiring shortly before Christmas in options. The only one that's not running in the direction I want is gold at the moment because I sold a 2050 call there, which I had to hedge completely at 2050 when we had the spike over 2100. Now we're at 2017, so I just gotta wait for that one. But as I said, I also sold an option on that one. So the decision making is there only at the expiry what I'm going to do with this.
Right, yeah. So let's see. I got some sound from MetaTraders. I have to see if that's I've stopped out on that, but it's looking decent. So right now I'm looking at EuroCHF, and usually I didn't like my plan for this. Like my plan for this was to just let my stop loss get hit. So when I entered this trade, I had an idea and a plan of I'm just going to place the orders because I've been trading that way, and I've went through my journal, and I've seen that my trade management has not been working out great lately, and I've looked at all the times where I've exited earlier or exited, it's been a mistake. So I took profits too early and it ran. I exited the trade, as a loss too early, and it became a profitable trade. And so I'm looking at this and I'm thinking, in those terms, I'm thinking, yeah, I'm probably going to keep this one open because that was my plan all along. But then I'm looking at this and I'm like, yeah, okay, this is probably going to hit my stop loss. So what?
But like you said, we are going to see the reaction into the other. After 15 minutes, probably you're going to see the reaction to the other side of the metal too.
Yeah,
it's really like you said, and guys, if you're watching this, really listen to Jonathan. Normally, the first reaction in news trading is the wrong reaction of the market.
Yeah,
over and over and over again. Yeah.
So what would you do in a situation like that? Because I think this is where most people get it wrong. Most traders get it wrong, and I'm gonna admit I do get this wrong a lot. And it's that impulse of saying, so I mean the idea was, and I can use the replay tool, and the whole idea here was for me to go short based on the system, and this is like an okay setup based on the system. But then on the next candle, it's not. So I get the short signal, everything looks good. But then on the next candle where we are right now, it's obviously looking not as good. I mean, I wouldn't enter this if I saw this. So
Yeah, but I mean, you have entered already. And I think maybe this signal is only invalidated if the candle now really closes also above this downtrend that you painted there.
Yeah,
Of course,
that's
you could
also
be
true.
unlucky now that it goes all the way up to your stop loss, and there's a whole lot, of course, going on a psychological level in a situation like this.
Yeah,
Like you
and
see,
what I
like, oh
wanted
my
to
God, I'm going to lose money. You know, it brings your blood boiling. You're going to get set or something like this. Not saying that you are doing this, of course, Jonathan. You've been in this for too long already.
I
But
think what I'm the problem I get in this situation, and I think a lot of people, new traders are like this as well, and they have a plan, right? They have a plan. They enter the trade based on that plan, and the plan just it sounds so good. It feels just incredible. It's like, wow, this is such a good plan. I'm gonna make money on this trade. I will be so happy when I hit profit. And then you're still in the trade, but it's starting to go against you, and you have the stop loss here. You have your entry here, and yes, it's close to stop loss, but it's still the same trade. And what a lot of people do is they just immediately just exit. And because it's like, oh, this is not the same trade. This is, I don't like it. I'm going to exit. So, and that has been a huge problem for me in the past where I've acted on impulses. So, what do you have any tips or techniques? Like, what do you do when you watch this and you get a feeling? Because like you look at price action, and I'm watching this and I'm completely calm. I don't care. Like, I really do not care if either TP or stop loss gets hit, because this is would be such a minor loss for me. It wouldn't even, like, I risk less than 1% of my capital on all trades. This trade might be 0.5% loss. I made 3% yesterday, so it makes no difference to me. But for a new trader, which, like, they have everything at stake, they think that they want to become the next best trader in the world, and they are very emotional. So what would you do in a situation like this if you're a new trader and you start panicking?
turn your screen off. No, I
Yeah,
really mean it.
yeah,
It's really it's the only, because you go crazy. No,
yeah, but
especially if you go
what
and
if
watch it. It's up to this day. I'm affected by the same. If I
yeah,
have a
so what
spot
if you're
trade
on a
that
live
is
stream? So what if you're on a live stream and you're doing an educational live stream with a
mm,
live trade, and you start to, like, ah, shit. What are you telling yourself?
well, I keep telling myself that I made the decision where to enter, where to exit this trade, where to cut my losses before I open the trade, and everything that happens since then, since when I made the active decision, I want to enter the trade here. I want to put my take profit there. I want to put my stop loss there. It's not under my control anymore after this. My
Yeah,
decision
yeah,
is made. I have to stick to the rules or the reasoning why I opened this trade. Of course, there's a possibility that I'm wrong. Of course, there's a possibility that I got stopped out unlucky, because when the market turns around again and goes in my original direction, and if I'm sitting there thinking like, oh shit, oh my God, what's happening, and that could be something that I up to this day is happening on a psychological level for me as well. Then I turn off my screen and I go
yeah,
out. I go for a walk. I don't look at prices for a while, and just try to calm down, because it's like
yeah,
making trading decision when you're under the influence of your own hormones, which cause these, let's say, emotional turmoil in your head and in your tummy. You're not going to make good decisions. It's the
no,
same when you're in love, and you know that love doesn't get mirrored back to you. You tend to make stupid decisions. At least us guys do.
yeah, no, I definitely 100% agree with you there. I think you said something important there when you said that you usually want to turn off your screen and walk away. And this comes from somebody who's been trading for 25 years.
Hmm.
So even after 25 years, you make the decision to walk away. And this just goes to show how well disciplined you have to be able to make it in this game, because both you and I know you could be trading for 100 years. we know that the mistakes are what happens between entry and exit, not after exit or before entry. It's what happens when you're in the trade. So you enter the trade and then you leave, because you leave because you know you made a decision to enter the trade based on your ideas.
Yeah.
And if your ideas are bad, well, maybe you shouldn't be entering the trade, right?
Absolutely, yeah. Absolutely. Your work is done after you enter the trade, basically.
Yeah.
And like you said, if you start manipulating your trade, taking the profits too early, maybe letting the losses
Look at that.
run too long,
Wow,
and so on and so
sorry if I'm
forth.
interrupting you.
Yeah. That's coming
But
back,
this
no?
this is the S&P 500. Imagine, I mean, this is what I'm talking about. The initial reaction is almost always a counter trend opportunity on the lower time frames. So we can look at you can look at the 1 minute. Look at this, absolutely amazing. I mean, the 1 minute might be a bit too much when we're looking at NFP, but I mean, you look at this and I mean, if it weren't for the news event, I mean, this is a short. I mean, if you're a breakout trader, you want to short here. Like you want to probably have a stop sell order, maybe, down here. And yeah, it would probably have, you would have been stopped out on the spreads. But imagine that it doesn't hit your profit here and it goes straight up. And I think a lot of this happens for a lot of people when trading news, is they enter on the first reaction and then it's just gone. Because remember, you look at the 1 minute, yeah, you might have even, yeah, you might have seen something like, I'm not sure, but you might have seen something like this and be stopped out by the spreads at the same time.
That's the problem also. Even if you enter a short, if you do the mouse click like 1 second after the news is out there, you're already too late, because you are in against algorithms that specialize on this, that have like a physical presence next to Reuters or wherever, next to the exchange, where they have this 1 millisecond, they're even down to the nanosecond by now, of information that you don't have at that point, and that they act already on it. And then they are out of the market when you've done your mouse click already. And you probably get eaten up by the spreads then, because maybe your broker suddenly, instead of 1 pip spread in euro dollar or euro Swissy, they have like 20, 30, 50 pips. Not because they want to rip you off necessarily, but just because the liquidity is not there at that moment.
Yes, I think it's an interesting price action here. So the non-farm payroll came in at, I believe, 200 or not 199 or stuff like that, and the number was higher than expected. So this means that there are more paid workers in America. More people are there. There's an increase in job creation, I guess. Maybe not job creation, but there's an increase of people getting paid.
Yeah, it's an increase of job creation. Exactly.
Yeah,
what it is.
I think it's a good measurement of the health of the economy.
Yeah,
it's one measurement of the health of the economy. So you're looking at this and you're saying there's more people making money in America today than there were 1 month ago, which means that the economy, and at least that way of looking at the economy, is doing better. And when the economy is doing better, the Fed wants to hike rates to slow the economy down, because if they can't slow the economy down, then inflation has a risk of going up. So now I guess people are thinking about what the Fed's response is going to be to this, which might very well mean that they want to increase rates. Now I don't really remember what happened during the last FOMC, but if I'm not completely out of touch with reality here, I think that they talked about the economy kind of slowed down, right? And
Yeah, I mean, they kind of, or Paul said what he's been saying for months now, as a matter of fact. The Fed is monitoring the situation very closely. They see that the job market is slowing down a little bit, that the economy has been slowing down. They are prepared to keep interest rates higher for a prolonged time, longer than the market is expecting. So it's what he has been saying all along. The thing, however, is if we don't see inflation now going massively up again, by that I mean we suddenly have like 4 or 5% inflation again, there is not the immediate danger that we see interest rates rising again. Like, for example, the CME, they always do like surveys on what are market participants expecting in terms of interest rate decision making for the next meeting. And right now we have 98.2% of market participants believing that the interest rates are going to be stay stable on 13th of December. As a matter of fact, for January, we have 92% of them saying we're going to stay at this range of 5.25% to 5.5%. We even have some people saying already, oh, we're going to see interest rates getting lower. It's just 6%. But usually it's a very good indication of what is going to happen in reality, the survey by CME. So it's always like momentarily. And you got to see also that what we are hearing from the Fed, from Jerome Powell, is they are very cautious, and they have to be cautious. First of all, because a wrong word can send the markets into turmoil if you're in a position like this. And second of all, they were completely caught off guard when inflation began rising in 2021 to 2022. I still hear this back then, Yellen saying this, Paul saying this, oh, it's all just transitory inflation. They didn't expect it would go up to 9%. So since then, they've become very cautious. They want to emit an aura of, hey, we have everything under control. No, we're not going to tell you what we're going to make, but we are prepared to do everything, we don't care about, how well off the economy is by our actions. Our focus is on price stability, which is okay, because this is what a Fed should do.
So maybe one could say, like, would you agree with the fact that they I mean, they're experts, but there's a lot of times when the experts are wrong, and I have a feeling that they want to sound like they really know what they're talking about, and they do know what they're talking about. I mean, they know economics, but they don't know what's going to happen. They have no idea what's going to happen.
They cannot look into the future. Absolutely. Yeah. I mean, ask 10 economists how their forecast for the GDP growth is for next year. You're going to have 10 different answers, with the spectrum going from, oh, economy is going to shrink until economy is going to boom, all the way there. It's like everything is possible. That's why it's so important also as a trader to come up with your own narration for it. Sit down, make your own thoughts, look at some indicators, look some charts, look what happened in the past when we were in a situation like this. And then you have to form your opinion about it, just like the two of us are doing here. And then you stick to your plan. And you don't deviate from your plan just because you read something on Twitter or saw a YouTube video about expressing a different opinion. Doesn't mean you shouldn't question your opinion, of course, but people tend to concentrate more on the noise than on the narrative, in my opinion. Because we like to only see what's going to happen tomorrow, what's going to happen in the next 5 minutes, what's going to happen next month. We have difficulties in looking into how's the situation going to be next year around this time, better I think, or worse.
Do you know when the next FOMC meeting is? I think it's going to be next week, right?
Yeah, we have interest rate decision on the 13th, so that's next Wednesday. And we should get inflation data before that also, no? I haven't actually looked into that.
I'm going to see. So I think
inflation, 12. So one day before, we're going to see inflation data.
Inflation data on the 12th, and then the interest rate decision on the 13th.
Yeah, that's going to be an interesting week.
That's going to be very interesting because now also with the job numbers here, I wonder what the unemployment numbers are. Did you get any numbers on that?
3.7% and 3.9% were expected. So that's much stronger than expected, actually.
Yeah. So the job market is much stronger. It's going to be interesting to see what the Fed has to say about that, if they take that into consideration when.
It's going to be interesting, probably also if we see an inflation rating that it's higher than expected next week.
Yeah.
3.1%. Let's see. But I don't believe so. I don't think we're going to see higher inflation. That would catch me by surprise, honestly speaking.
Yeah. So what I mean, for me, this doesn't really change anything for the plan for Bitcoin.
No, not at all. Not at all. And
No.
I mean, you can see it's like already digested. No, we are back
Yeah,
at the levels that we started.
I do think this was pretty much a non-event. Let's see what my trade is doing. Is it looking really, really good? Man, it's not looking good. So I'm just gonna at this point, I'm just gonna let it hit my stop loss. If it does hit it, but you had you were betting to the upside on this one.
Yeah, but it doesn't. I sold a put on dollar call on the Swiss francs with a strike of 85.75, and yeah, I'm pretty much back to zero because it expires on the 10th of January. So I'm betting there that the market is not going to move that much. So I can suck out the time decay of the option. I got the premium for the option, so if the market doesn't move every day, the option is worth less, which is good in my case, because that means I don't need to buy it back.
That's interesting. We should do a webinar where you explain the options trading.
Definitely. I think it would be very suitable actually for your trading strategy as well. And it kind of takes off the psychological momentum of things like this, because you don't really care about if the price goes up by 50 or down by 50 pips within a minute.
That's interesting. Yeah. That's very interesting. Yeah, I would love to do that. All right, so we're almost at an hour here. Is there anything else you wanted to show here, Dirk?
No, I think I'm pretty good. Still have my narrative that I had for over a year now. I'm bullish. It paid off heavily over the course of the last year. There were moments it was painful, of course, as well, where I doubted myself. It's part of the game. It happens to anybody. It happens to everybody. So let's see. Next week is going to be very interesting, for sure. Interest rate or inflation data. Let's see if we do something again, maybe live. Probably the inflation data is the more interesting one.
Yeah, we might do a live on your channel covering that event next week.
Sure.
And make sure you guys follow the good, the bad, and the Bitcoin. Again, he has uploaded a really, really good video. You should all check out. And yeah, man, we'll keep in touch, and hopefully we'll be able to do something live together next week.
Take care, everybody. Have a good one.
Yeah, take care, guys.